Hello and Assalamu alaikum. This is Zishan Hassan, tutor of Advanced Audit Assurance AAA exam. In this video, we will learn the lesson money laundering. So, firstly, let me tell you that what is money laundering? Money laundering is the process by which criminals is the process by which criminals attempt to conceal the true origin and ownership of the proceeds generated by illegal means, allowing them to control over the proceeds and ultimately providing a legitimate cover for their sources of income. What does it mean? Let me repeat it for you. Money laundering is the process by which criminals attempt to conceal the true origin and ownership of the proceeds generated by illegal means. For example, criminal generated the money through the process of extortion money, and then they put those money into the legal financial system, such as into the construction business, to show it as the legal money. This process is known as money laundering, right, folks? Now, so we have three stages of money laundering. Okay, we have three stages. And what are those stages? Firstly, we have placement. Now, what is placement? Funds, it is funds obtained through criminal activity is first time placed into the financial system. That's placement, the first step of money laundering. Then we have the second step, which is layering. Now, what is layering? Illegal cash is disguised by passing it through complex transactions, making it difficult to trace. For example, uh, first we illegal money introduced into the construction business. Then we took out that funds, we put into the stock market. From stock market, we put it into the furniture business, and so on. Like that, we are just rolling our illegal funds. At the end, it will be so difficult to trace the true origin of those funds. This process is layering. Then we have the next and final step, which is integration. Now, what is integration? Very simple. It is the illegal funds are moved back into the legitimate economy, and they are not clean enough. Okay, illegal funds obtained funds are moved back into legitimate economy, and it is now clean. Okay. Now, what are the money laundering offenses? Let me tell you the few types of money laundering offenses. What can be those? Number one, acquiring, possession, or use of criminal activity. Um, concealing or disguising, or transferring criminal property, or removing it from the country. Next, number three, failure to disclose knowledge, or suspicion of money laundering. Number four, failure by financial service business to meet their obligations under money laundering regulations. Finally, the last one, taping off. Okay, so you might be wondering that what is mean by taping off. So explain it to you as well, folks. Tipping off. So tipping off means to carry out any action that may make suspected money launderers that may make suspected money launderers aware that they are under investigation or prejudicing the outcome of an investigation, right? For example, you just go and inform that, dude, they are investigating that you are involved in the money laundering, or they are suspecting you about the money laundering. If you did so, that comes under the offense of money laundering. It's tipping off. So failure to disclose knowledge of suspicion of money laundering may include failure to disclose money laundering. ML stand for money laundering over here. This includes failure to inform about suspicion, failure by MLROs, that means money laundering reporting officers in the regulated sector, to make the required report to regulators. Okay. Now let us look at the anti-money laundering program. Anti-money laundering program anti-money laundering program. Money laundering regulations impose certain obligations on financial service businesses which are desired to assist in detecting money laundering and preventing the financial service organizations being used for money laundering purpose. So at a minimum, anti-money laundering program should include number one, customer identification procedures, which customer identification procedures should include their their documents such as national ID card, passport, driving licenses, a proof of income, that sort of stuff, right? Then enhanced record keeping for all transactions, and the verification of client identification and the verification of client identities 3. Appointment of money laundering reporting officer. 4. Establishing internal reporting procedures. 'Internal reporting procedures to money laundering reporting officer. Number 5, procedures for the reporting. For the reporting of suspicious transactions. To MLRO. Okay. Systems and controls that effectively manage the risk that firm is exposed in relation to money laundering activities and ensure compliance with the legislation. Okay. And finally, the training of all staff. Training of staff according to the requirement of the legislation. Okay. Now, next, customer identification process. What we just look at in brief earlier, customer identification process. Now let us look at in detail. It is also known as due diligence, right? Although we will be discussing in little detail here as well. So, custom accountants, professional accountants required to establish new clients are who they claim to be obtaining satisfactory evidence of identity from the client. This is also known as customer due diligence process. So, customer due diligence is actually an essential part of entire money laundering program, right? It ensures the accounts, number one, know who their clients are. Unwilling to accept the clients who are at high risk. Number three, know who their clients are, unwilling and should be unwilling to accept those clients who are at high risk. Now, who can be at high risk? Uh, the one, the one whose transactions are unknowing or suspicious, right? Now, next question, the identification process of the clients. So, firstly, let us just look at this for the individuals. inspection of evidence to establish what can be identification process, their full name, their national ID or passport, their driving license, their utility bills, okay, their address, etc. Now, for business, evidence include what? Certificate of incorporation, list of registered members, director's certificate of registered address, okay. Next, the enhanced record keeping. It is very important that accountant keep comprehensive records to show that they have complied with money laundering regulations. Now, records must be kept of number one, all customers, due diligence completed. Two, um, copies of the evidence inspected. Three, transactions with each client. Internal or external money laundering suspicious activity reports. Record must be held for at least 5 years after a relationship with client ended or the date of transaction is complete. Right now, you might be wondering who is MLRO. Who is MLRO? Individual of suitable seniority. Okay, is a person of suitable seniority and experience, and it is recommended that alternative arrangement should be made. must be made when MLRO is unavailable. Sole practitioner with no employees or associates are exempt from the requirement of MLRO as they are reporting themselves. Now, what are the reporting procedures? Okay, what are the reporting procedures? A person in the organization is nominated to receive disclosure under this regulation. Anyone in the organization to whom organizations comes in the course of relevant business as a result of which he suspects that a person is engaged in money laundering. So must disclose it to MLRO 3 where disclosure is given to MLRO. They must consider it in the light of any relevant information which is available to organization and determine whether it give rise to suspicion or not. So far, so good. I hope you're getting it. Now, suspected suspicious transactions. Which transactions can be suspicious of money laundering? Is the our next question. So, number one, unusual large cash deposits, frequent exchange of cash, into other currencies, overseas business arrangement with no clear business arrangement. Right. So in this scenario, the firm should conduct of relevant business, must take appropriate measures to ensure employees are trained about the relevant regulations. They must have the awareness of the provision of anti-money laundering regulations. So give training to them to recognize and deal with the transactions which may be related to money laundering. Right. So far, so good. And that's the end of the our this area of money laundering. I hope you get it. If you have any questions, you can ask me your question into the comments. See you folks. Bye bye.